Yeah, good day, guys. So we continue with our bootcamp. Today is day two of our trading bootcamp, and today we're going to learn about market conditions, which is basically simplified as trending market versus ranging markets. We are going to learn what a trending market is and what a ranging market is, and what to look out for in these market structures or conditions. Conditions is the right way to call them market conditions. So before we begin with, we have three market conditions which are, let me illustrate them for you. We have an uptrend as we've learned in the previous module, which was day one. So we all know an uptrend is made up of higher highs and higher lows. Then we also have a downtrend, which is consistent lower highs and lower lows that make a downtrend. So we have an uptrend, a downtrend, and the last type of the market condition is a ranging market, equal highs and equal lows. You see, this is what we call a ranging market. So I'm going to explain everything into details and what you must know when you see these kind of market conditions, what to expect in your head, what you should think as a trader or know as a trader. So let's begin with an uptrend. An uptrend. Now, when you go, before you can even place a trade, there are two sides to trading. There's buy order. Sorry about that. There's a buy order and there's a sell order. You either buy or either sell. And what I told the other time, buyers they also call bulls. Buyers or bulls means up. Sellers or bears means sellers and bears are down. So buyers are up, sellers are down. Are you getting me? So we sell when we want the market to go up or when we predict the market to go. Sorry about that. We buy when we predict the market is going to go up in order to make profit. That's how we make profit. If you predict that the market is going up, you buy. Predict that the market is going down, you sell. So it doesn't mean that whenever the market's going down, we are losing money or something like that. It depends on your predictions. When the market's going up, we buy. Sorry about that. We buy in this trend. This is an uptrend. Why? Because it's moving up. You get me? It's an uptrend because it's moving up. It's visually moving up. I basically showed you an uptrend in the previous module. That was day one. So if you haven't watched it, please go watch it because I can't just keep on repeating myself. Okay, so an uptrend, we are looking for what buys. We're looking for buys in an uptrend. We don't look for sells in a in an uptrend. Beginners usually sell in uptrend just because they saw a reversal or something. No, we don't do that. We are looking for buys in an uptrend, only buys. You get me? Okay. So let's move on to the second condition, which is a downtrend. This is a downtrend. Why is there a downtrend? Because it's moving down. What else? Because it has a series of lower lows and lower highs. You get me? It's made up of lower lows and lower highs. These are made up of lower lows and lower highs. That make them a downtrend. It's also known as a seller's market. You get me? It's a bearish momentum. It's bearish. When I say bearish, it means down. When I say bullish, it means up. Because what I told you, bull means up, bears go down, bulls go up, bears go down. You get me? Bulls go up, bears go down. You get me? We are in, when we're in an uptrend, we have a series of higher highs and higher lows. When we're in a downtrend, we have a series of lower lows and lower highs. I've taught that in the previous model. If you don't still get it, please check out the previous model. Explain everything into details. You get me? Today's work is really on ranging markets. That's what I'm going to teach next. That's the third condition in the market. So what do we do in a seller's market or a bearish market? We look for sales. We don't look for buys in this market. You just end up losing all your money. We are beginners. Please understand as beginners, we only look for sales in a downtrend, only for buys in an uptrend. That's all we must do. Nothing more, nothing less. Try to go against this rule and you end up losing all your money or you end up blowing your account. You get me? Okay. So let me delete these ones. Okay. So we are moving to a ranging market. A ranging market is a market made up of equal highs and equal lows. Okay, don't get me wrong, but some people, I'm not trying to pinpoint anybody, but some people would actually tell to trade trending markets. But I won't like advise you trading ranging markets. Although it's nice to trade trending markets, it has its pros, but it also has its cons. You get me? Now let's clearly define what a ranging market is. Ranging markets is a market that has a series of equal highs and equal lows. Equal highs and equal lows. Now let me tell you what some teachers or traders will tell you. They will call this one the top one resistance. They will call the down one support. Okay. Yes, my drawing is not that good, but I will take it like that. So other traders will tell you to treat support and resistance. So the yellow one is support. Sorry, the yellow one is resistance and the red one is support. Support and resistance trading. So some traders actually use this method. So they'll wait for two tops to get hit. Let's say this top, and this down, and this top again. So after they have these two pitches, they presume to draw these lines which have drew the support and resistance and trade off of them, saying that when it when it hits this low and hits this low and makes a move to rise up, they click on buy and they'll place their profits over here. Why I want to advise this type of trading is that the market can reverse back to their support and end up hitting their stop loss because they usually put their stop loss below. They put their stop loss on the support and aim their take profit to the resistance. That's what some people teach you online. It's good you can trade it, but the win ratio is very, very low. I've tested it myself. I've been trading for nearly a year now. I've tested it. The win rate is very, very low. Trust me. So what do we do in this type of markets? What do we do in trending markets? Stay on me, guys. I'm coming. So in ranging markets, I would advise you to wait. Do not trade. Do not take a trade in ranging markets. Wait for a clear cut trend, an uptrend or a downtrend. Ranging markets are really risky to trade, especially for beginners and those with small capital. Most of us can't fund our accounts like 10k US just to trade. That's not feasible for us in our current moment. So again, I'd advise us not to trade ranging markets because we are just going to end up blowing our account. Okay. So now that you know the concept of ranging market, so per my definition here, ranging markets in ranging markets, price makers are not clear. There are no clear cuts, higher highs or lower lows. It's it's moving sideways, it's moving up down, it's moving sideways. So the buyers will push up, the sellers will push down. There's no clear cut control of who's in control of the market. If the buyers are in control, we are in uptrend. If the sellers are in control, we are in a downtrend. You get me? So in this type of market, we don't know, so we won't trade. Okay. So I'll try and see if I identify some range markets over here, so I can show you guys. No, okay. There's a clear cut example of a trending market. So what do we see? What do we see? This. Oh, nah. Sorry about that. This array present array. What we notice. Let me know use array. Let me know use array. So what can we identify over here? There's no clear cut. There's no clear cut like trend. We moved up. We moved up and moved down. Moved up. Moved down. Moved up. Moved down. Moved lower. Moved upper. So you get me? So like made a higher high, we made a lower low, we made a higher low, we made a lower low, we made a higher high, made a higher low, we made a lower high, made a lower low. You see, there's no clear cuts, there's no clear cuts trend for this market. So what do we see? This is not feasible to trade, even with support and resistance. You even get the support level, you even get the resistance level. Ah, what do you think? Sorry, I'm coming, guys. I think I clicked on something. So it seems that thing is not working. So I'm just going to conclude. So what did we learn today? We learned there are three types of market conditions. We have an uptrend, we have a downtrend, and we have a range in markets. An uptrend is made up of higher highs and higher lows, which means buyers are in control. Okay, I think it came back. Which means buyers are in control. Where's our deflation? Which means buyers are in control of the markets and we are looking for buy orders, no sell orders over here. And what do we know? A downtrend is a trend made up of lower lows and lower highs. Nothing more, nothing less. You only look for sells in this kind of market. You don't look for buys. If you buy in a downtrend or a bearish trend, you lose your money for beginners. And what we ended with ranging markets. Ranging market is made up of equal highs and equal lows, and there's no clear cut trend. What we do in this type of market, we do not trade, we wait or find other currency pairs that are trending to trade. You get me? So yeah, that's it. That's going to be all for today. Hope to see you in the next bootcamp. Please stay with me and please share to your friends who would like to learn trading. So I'm Ace and see you in the next one. Bye.